Right. And now I'd like to welcome in as we take a quick break. I'm going to introduce Scott Russo, founder of Dasein Capital, and Dustin Drees, a venture investor at Panoramic Ventures. And gentlemen, we have quite a bit to talk about today because we're just seeing so many changes in the market with current market conditions. We're seeing rising inflation and higher interest rates. And so I'd really like to get your take on what those impacts you're seeing initially and what you expect long-term. And when it comes to investment in sports tech startups, given the market conditions.
Go ahead, Dustin, if you want to start.
Yeah, absolutely. So I think it's we're at a really interesting place in the market. I think everyone has seen a lot and understands that we're definitely going through sort of a repricing and a readjustment of what's happened. There's been more words written about this in the last 2 weeks, it feels like, than were written about it over the last 10 years of the ride up. Ride down is always a lot less fun, but I think it overall, as we think about it as a fund, is what we're telling our portfolio companies is really the people it impacts are people that have top ticked, or people that frankly were working on borrowed time. If you're still building a business, you're thinking about building a going concern that's eventually going to have cash flow, that's solving a real problem for customers. Sure, you're probably going to sell a little bit more of your business, but still, even if you look at where multiples are now, historically, you're still in a good spot. I think, from a sports tech perspective, I think you didn't have quite the run up on multiples, especially if it was a hardware based business or something like that, that maybe some of these other businesses, like pure SaaS businesses, have had. But you're just seeing sort of a coming back down to earth of things. So it really is more, for me at least, I think it's more of an adjustment of expectations of, yeah, it would have been great if things lasted forever and these businesses were worth 4 times what they really are worth historically. But at some point things revert back to the mean, and you're back to the mean of where things have been really throughout the history of where businesses have traded, generally speaking. So I think it's being comfortable with that and understanding that, and understanding that, yes, some of your peers may have top ticked. You can always perfectly time things, but that's really hard to do, and generally a really risky bet.
Yeah, I'll pick up on a couple quick themes. The pendulum swings, as we all know. So here we are, and the pendulum is sort of swinging back a little bit. And that just like the rising tide helps lift all boats, the opposite's also true. So it's going to be a little more difficult. Certainly, like you said, Dustin, valuations and multiples are going to come down. One could argue they should have anyway, outside of the sort of macroeconomic issue, conditions that we're facing. So that's just the way it is. And again, like Dustin said, those who are struggling are going to probably, get a little bit of a boost toward where they're going to end up. But those who are building and creating and have potential value, you'll be okay. Maybe the valuation isn't what you'd expect or wanted based on recent history, but it's still going to be solid. You're going to get good investment. There's money out there. For those looking for angel funding, what I found in the past as both an entrepreneur and an investor is when the equity markets tighten up, sometimes that's an opportunity for some investors who are looking for alternatives. So they're obviously, if the markets are going up, they're going to keep their money in the markets. If it's sort of not, a little questionable, they might take that out and look for higher risk, high reward, longer term value creation kind of thing. And that's where startups could kick in. So, it's easy to say, but you will find some folks out there where the dollars that they might not allocate towards startups might shift a little bit. That dollars have to be there. So you don't want the markets to go down too much, but that reality sets in for angel investors if you're looking for those in your funding strategy.
So Scott, then following up on that, fundamentals are key, but what are kind of the most important aspects that you see that sports tech startups are going to have to offer to get that future investment?
Yeah, for future investment, I think this is going to sound obvious and cliche, but more important now than ever is hit your milestones. I think be very thoughtful about the milestones that you create and spend a little extra time creating them. What's right for your business, what's right for what you're doing, lay them out there, put them out for everyone to see when you're raising money, now you get the money in, and then you can show that you're hitting those milestones and creating the value doing what you said you're going to do, so that the later money, it'll be a little tight, valuations aren't great, but you've proven what you've said, you can do what you say. The idea will get interest, ideas are always good and create conversation. A great team will lock in the early money, but the later money comes when you execute, you get it done. So I think the best way to sort of make that actionable is to just be really thoughtful about what those milestones are. Don't be afraid to, like I said already, put it out there and then just go do it. We're sports fans, we're athletes, we're whatever. We should never shy away from the hard work. That's what we know that gives results, and that's no different in startups.
And I just, if I can add to that, Mindy, I think the positive thing there is what you saw over especially over the last 2 years, was this like hype cycle, right? And coupled with a super accommodative Fed and really low interest rates and all these other macro things that just lead to asset prices going up. You saw what that did in private markets a lot of time is, so prices went up, and then really the unsustainable thing for us was just the speed of deals getting done with little to no diligence. And I can't tell you how many times we passed on something where we talked to someone on Monday, we're like, hey, I really like this. They're like, well, we need to know by Friday. We're like, I'm sorry, we're not going to get there. And these are like big deals, hundreds of millions of dollars valuations, and just not a lot of diligence going. What this does for you, to Scott's point, if you hit your milestones, you say, this is what I'm going to do, and you go do it, people are going to spend more time looking at that versus, acting on FOMO or sort of these momentum trades that have become super common in the last little bit. It's going to require actual effort as an investor, and some analytical horsepower to really parse through these things. So if you're building a real business and you've been frustrated because maybe you're not part of the right network or the right ecosystem, or you see a competitor that has an inferior product that is raised really quickly because of, some reason outside of business fundamentals, now's your chance. And I think that's really comforting and meaningful to a lot of businesses.
And do you find that being in the sports tech startup space is an advantage over other startups? Any quick thoughts on that? Just obviously we know the popularity of sports, but are you seeing in the current market conditions that can serve as more of an advantage?
For what we're seeing, I think, look, ultimately where I think a lot of sport and sports technology helps is you have a passion, right? You're not a lot of people wake up. I was literally just in a conversation. Not a lot of people, and we were talking about it's a kind of sports adjacent company, but we're using the comparison of HR tech software. Like, not a lot of people wake up in the morning thinking about how stoked they are to use their payment, their HR tech software or their payroll system or something like that. Sports you elicits a passion. So as a founder, I think you have that. I think as a business owner, people are doing this because it's something they're passionate about, like Scott was saying. So I think that helps drive you in other markets when, hey, if you're selling software for, I use HR, and apologies to any of the HR professionals on here, maybe the passion isn't there. I think the other thing is sports are pretty, I don't want to say counter-cyclical. It's not really cyclical at all. They're pretty consistent throughout time in terms of fandom, and people still end up going to, in downturns when the market's up or down, people still end up going to NFL games and NBA games. You look at the price of sports teams, and those have continued to shoot up. And you look at the rights payments that, the Apples and the Amazons and the ESPNs and the Foxes of the world are paying. Those continue to go up because people value live sports. There's something there that I think helps you, avoid some of the massive waves that, are maybe hit by other industries.
Yeah, I agree. I want to quote Terrence Mann from Field of Dreams, but maybe that's not appropriate. Like, the one constant is baseball, right? We know if you broaden that to sports, there's some truth to that. There's a constant there, no matter what's going on in the economy or anything else, where sports, elicits that passion, like Dustin's saying. And so you bring that not just to sports, but athletics and fitness and everything that really people today are really doing with their time and focused on. That energy, that interest is there. And then you overlay, I've been in technology startups my whole career. And the innovation right now with technology is just phenomenal. It's just in all directions, and the application of it to sports is fascinating. As we see in these demo days, in these presentations, it's just a deeper understanding of technology and how to apply it for folks to benefit from it in all these ways. And that sort of crossroads, I think, is opportunity. That's not unique. I guess you're asking whether it's unique to this sports and tech, but it's certainly there, and it's certainly very strong. And then you have groups like NextUp here to help you out and partner with you and sort of show you the way. The whole pitch from NextUp is about why sports and technology, it matters now, why the opportunity is now. And I think there is a lot to be said for that. And having these demo days and these startups, talking about what they're doing and getting out there and executing, we'll sort of prove that out.
Yeah. Scott and Dustin, thank you so much for your insights. And